What lies ahead for crypto markets? I'm Caroline Bowler. Crypto Corner starts now. Welcome to Crypto Corner, presented by BTC Markets, where each episode we explore the latest in crypto market trends. In this episode, we catch up with Jamie Coutts, Real Vision's Chief Crypto Analyst, for an update on market conditions, trends, and the outlook for the rest of the year and into 2025. Jamie, thank you so much for joining us.
Thanks for having me, Caroline.
First of all, I think I probably want to say how delighted BTC Markets are with our exclusive partnership with Real Vision, where we're going to be able to share content delivered from yourself, Jamie, in your Actionable Insights newsletter to BTC Markets clients, along with a discount code to join the Real Vision community. So thank you so much for helping us with that, and I'm really looking forward to seeing where we go from there. So to get into the meat and the bones, though, of the interview and what we have to talk about, I want to talk about how important is the macro environment for crypto prices, and what exactly should investors be looking out for as we move through quite an interesting year across 2024 in the macro markets.
Yeah, well, I mean, macro factors are everything for crypto because they're very much intertwined. And if you think about like the technology that underpins crypto assets, which is blockchains, they're essentially monetary networks. And so these monetary networks not only facilitate just the standard value exchange, but they also, because of their open and programmable nature, they allow us to do many of the functions that traditional finance applications or services do today. And so what that means is at the macro level, it really just impacts these assets in a very, very profound way. In the case of Bitcoin, it has these very unique properties of a fixed supply of 21 million, as everyone knows. It has a 4-year halving cycle, which reduces the monetary inflation, which makes it really the hardest form of money we've ever seen. And that really means that it's the perfect macro asset designed for the digital age. And so when you think about what's happening in the macro landscape, Bitcoin is just really a mirror reflection of what's happening, or a counterbalance to traditional finance. So as governments increase the amount of debt, as central banks print more money to stabilize the global financial system to support that debt, then Bitcoin becomes more and more attractive. And so as you start to see the expansion of monetary policies and even more restrictive regulations and restrictions on civil liberties, that only increases the appeal of Bitcoin's fixed supply and also decentralized nature. So the really important things, I think, for investors to think about when they're looking at the asset class and trying to use what's happening in the macro landscape to inform their decisions is to look at a couple of really key areas, which is obviously the central bank policies. What are they doing in terms of interest rates? What are they doing with their own balance sheets? Because they've been using their balance sheets to support the global financial system for over 15 years. You can also track, very importantly, the US dollar, because the amount of outstanding US debt or denominated debt is so large now that every time you see the US dollar strengthen, that acts as a very constricted measure and reduces liquidity in the global financial system. So conversely, when you start to see the US dollar begin to weaken, that's generally very, very positive for risk assets and positive for crypto in particular. So, we'll start to see some changes in the next couple of weeks and months in regards to monetary policies. But the important thing is for everyone is to not so much look at what's happening now, but try and anticipate what's going to be happening in 6 to 9 months' time. And so do you think that basically interest rates are going to stay where they are, or they're going to start cutting? Central banks are going to start supporting the global financial system if unemployment starts to tick up, which it seems to be in the US. Are central banks in China and in Japan going to continue to allow their internal domestic economy to slow? So I think we're on the cusp of a major turning point for global liquidity.
I think that's probably a fair assessment. Well, it definitely is a fair assessment, particularly given the insecurity that's to come with the US election, and to that point about the US, a weaker dollar, given for what the analysis has said, we have a very different reaction to a Trump versus a Harris presidency. So that is going to be really key, as without being cliche, but it is going to be so key, as we move through. And certainly your point about Bitcoin being a mirror and its association with a risk-on appetite rings true, and we've seen that come through in so many different market cycles. But so then for the the individuals who are looking at Bitcoin in particular, what does that year-to-date price action reveal about the outlook? Using that context you say as a mirror to macro. And so in which point then, so what should investors assess to gauge the overall asset class health? You've certainly mentioned liquidity previously. Is that something we should be looking at again as we move into 25?
Yeah, well, I think we're just coming out of a tightening phase. And so this inflection point is generally very supportive for crypto assets. And I think the concerns that people have about the unemployment rate in the US ticking higher and a general slowdown globally is warranted. But as we've seen previously, governments and central banks working in unison will always debase the currency to get themselves out of a slowdown in financial conditions. And so I think we're about to see that occur 6 to 12 months time from now. I expect that central banks would have added a lot of liquidity back into the system. The US will undoubtedly be cutting rates, or will have cut rates by at least 3 or 4 times by then. And I expect most other countries and central banks to be doing the same. So I think, you can look at what has already happened. Bitcoin is up 33% this year. Gold is up 22%. The S&P is up 15%. So once again, it's outperformed. But back in 2023, it essentially rose about 300 and 350%. So it's the best. Once again, I mean, we shouldn't look at very short windows, but really over most time horizons, Bitcoin's been the best performing asset. And that's just because there's structurally a problem with the global economy. There is too much debt. The interest payments are unaffordable for most governments. And so the likely path for central banks and governments is to debase the currency, which obviously is bad news for us as consumers, because we'll start to see higher price inflation, and segments of the economy that are not open or deregulated or allowed to sort of compete. So you see pockets like in education and health where costs are rising much higher than the CPI rate, but in other areas where technology is able to proliferate, we start to see sort of prices falling. So put all that together, I think you've got an outlook which is at the moment may not seem like it, but actually very constructive for crypto asset prices. And if you look at the broader asset class beyond Bitcoin as that core asset, typically what you see, in the case of Ethereum as sort of the benchmark asset for smart contract blockchains, and these other sectors like DeFi and DePIN, they generally do well once Bitcoin is sort of at all-time highs or broken out into a new uptrend, and certainly after we've started to see at least 1 or 2 interest rate cuts.
I think, to your point, that certainly what we're seeing in the market in terms of liquidity and just people becoming more engaged in cryptocurrency, there is a sense that pressure is building, that we're going to be seeing a breakthrough. But I do feel as though there is a reluctance and a hesitation, cost of living, but also the insecurity around what's going to happen in the United States for all the points that we've discussed earlier. I think 25 is going to be a breakthrough year potentially for the price of Bitcoin and just for liquidity and re-engagement with the asset class in general. But just on that point, actually, you've previously predicted that blockchain users more broadly will grow from 15 million to 100 million by 2023, which is really not that far away. What do you see as the drivers for this, and how is that going to potentially impact any asset valuation?
Yeah, so I mean, back in 2016, when Ethereum just started, there was a couple of thousand users, or active addresses is really the proxy or the metric that people in the space tend to use. And so from a couple of thousand users in 2016 to 500,000 in 2020, to 17 million was the last count just this month. You're looking at a technology that's going through an exponential adoption curve. And so when you're growing at sort of like 180%, if you just straight line that out into the future, from where we are today, it's quite plausible that we see 100 million active addresses using blockchains on a daily basis. Now, what does that actually mean? An address, as I said, is just a proxy. One person may have several addresses, or one address may be acting on behalf of many people. So it's a gauge. It's not perfect for people, but at that kind of number, that would put it, well in excess of PayPal. If you think about PayPal today, it has about 400 million active monthly users. Netflix, about 250 million active monthly users. So if you extrapolate what daily means into monthly terms, at 17 million today is about 117, maybe 200 million monthly active users. So it's already catching up to Web 2 companies like Netflix. But let's say in 5 years' time at this kind of growth rate, you could see a billion monthly active addresses using or interacting with blockchains. And the really fascinating aspect to this, and what I think the market is still missing, is the role that AI will play in the adoption of blockchain. So we are already seeing a lot of activity coming from bots. So whether these are automated trading strategies or systems, or gaming systems operating on blockchains today, they're pretty unsophisticated when compared to AI. But that's really just the first generation. I think we're on the cusp of AI agents starting to proliferate. And once you start to see AI agents, you can start to think of that as really infinite demand, infinite workforce. And, in the world of AI agents, if I took my situation as an example, if I wanted to engage an AI agent to maybe build a financial model, there are certain things that I would ask it to do. I would ask it to source some data. I would ask it to, basically build things, in which case it may need to outsource some of the tasks to more specialized AIs. And there are things that, one would need in that workflow, which is authentication of the data, provenance, where it came from, is it accurate? And also, purchase and commercial agreements. Now, AI is not going to be able to get a bank account. It doesn't have a driver's license, so it won't pass KYC. And even if it could, it can't use traditional financial rails. It's just, there's too much friction, it's too expensive, it's too slow.
And I think that's probably one of the main points when we talk about blockchain and AI. There seems to be, they're kind of putting contention against one another, but that, quite naturally may not actually be the case. Despite what the media may be telling us about it, that may not actually be the case. They may actually be able to work together. And I think that's probably a really good point. And unfortunately, at that time, we have run out of time. And I'm afraid I'm going to have to wrap this one up. Thank you so much, Jamie. Really, really appreciate sharing on all your insights as per usual. And I look forward to talking to you again very, very soon.
Yeah, thanks a lot, Carolyn.
Thank you. This is Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.